Now, I just want to bring this trade idea to your attention. I'm playing devil's advocate here, and we do have a potential long, short to medium term long for the British pound against the Swiss franc. You might be thinking, in the wake of Brexit, who on earth would be going long on the British pound against anything? Well, actually, the technicals do tell us a very interesting story here. Look at this here. We've got a multi-year low, multi-decade low, or in fact, indeed, the all-time low here, should I say, at 1.160. And we've just ricocheted off that, as predicted, after the fall into this range has completed itself. Or has it? The fact of the matter is all the way back in October, we saw price responding to it, just like it did back in 2015. And, of course, 2011, it's hit this level 3 times. And on each of these occasions, it's gone straight back up to the mean, all the way back into the range. You can see it's a very well-established range on the weekly. Okay, so irrespective of what perpetuated this, the technicals do tell us this story. So what is interesting is the fact that we've had this pullback, we've had this close above the 20 moving average, and we've got this higher low here. Okay, last week closed as a bullish pin bar reversal significantly. And whenever we see reversals, just like some of you who were keeping up with the CAD Swiss position, which we traded last weekend and are currently still in it, this is indeed the same setup except the other way round. And you know, it is quite a like catching a falling knife, you might be thinking. And of course, this kind of setup is not for everyone. Reversal trading carries a much higher degree of risk than trend trading. So like I said, this might not be for everyone. In fact, I can fully respect the fact that you made a decision not to trade this, but it is a bona fide setup. Sure enough, it's about 80% unlikely to succeed. Like reversals are only 20% successful, but if it does succeed, the profit potential is pretty good. Like for those people who traded the British pound short against the Swiss franc all the way back in December last year, you would have made a veritable fortune in terms of percentage gain, pips and monetary gain, even risking 2%, which is what we did on multiple positions on the way down. Well, who's to say that we can't take advantage of the movement on the way up? Remember that we've got prices come down to this 1.1500 level, which has been unbroken for many years. It's tested it on the third test, it's come up, it's made a high low after retracing off it, and this is a sign of a potential W-shaped reversal. And what is interesting as well on the weekly is we've got bullish reversal divergence, so we've been having that one for quite some time, ever since March last year. I know bullish reversal divergence over the long term can be rendered as meaningless. I prefer shorter term divergences purely because they're more relevant of what's happening in the market right now. And you know, we've got that snapshot and we can adapt to it and we can be competitive in our risk management. Whereas this has been very long term, and you could quite feasibly say, well, hey, if we've got all this bullish reversal divergence here going against the actual downward trend, well, the price has still gone down, and it really has. However, in terms of the present snapshot we have of this higher low here, it's supporting a potential medium or short term long. What is interesting as well is the fact that if we did decide to actually buy this, okay, with our entry above the high here, stop loss below the low, then is it going to be worth our while? We've got about a 1.5 to 1 reward to risk trade if we have our first target as this previous swing high here. 1.5 to 1, is that enough? Well, you can answer that for yourselves, really, can't you? Is that going to be enough for trading a reversal? That should be our first target. At best, this is going to be a complex reversal pattern, or complex retracement, my apologies, a complex retracement where we've got the ABCD, A, B, C, D. So we could potentially have it where we have the equivalent of what is A to B equaling C to D. So let's just get out of there, close, and drag this, and we can reasonably expect, based on harmonics and ABCD patterns and how they normally function, we can typically expect a retracement to this point here before a continuation to the downside. Now, Article 50 is allegedly going to be triggered in March. I know this is a bit of fundamental kind of like application here, but it all kind of blends the picture. So if we've got Article 50 triggered in March, it's likely, if Trump's inauguration day is anything to go by, that we're going to see a bit of an adverse reaction of the British pound. Okay, can it get up to between where it is now and here by March? Well, like I said, anything can happen at any time in the markets. Is this a potentially good take profit zone here? Absolutely, yes. For those contrarian traders, that would be an excellent take profit level, because it's the end of the ABCD pattern. However, that is it. Like I said, it's a high risk trade, and I can at best only imagine that this, given the state of political and economic affairs in Great Britain, I can imagine that this would be the best it's going to get if it indeed goes this way at all. Okay, so that's a potential target just at one spot 33.24, and if you did have the, forgive the expression, the testicular fortitude to take this, like I said, it's not for everyone, it's a high risk reversal trade, then the safe way of doing it will have your entry above the high, stop loss below the low, and scale out. Of course, move your stop loss to break even as and when you've got two buy bars in your favor. You trail below the low of every second buy bar, or indeed, if say for example you're risking 200 pips difference between entry and stop loss, if as and when you're 200 pips in profit, then you move your stop loss to break even. Okay, so if you do take this trade, then a good way to scale out would be to scale out half your profits here if you do get triggered and if the market does go in that direction, and then just leave your second scale out opportunity here. Okay.